The world's largest asset manager, BlackRock, just got the green light from the UK's Financial Conduct Authority to operate as a crypto asset firm. Now, this is a huge moment for the crypto industry in the UK, but what does it mean? Is this a sign that institutions are taking over Bitcoin? Or is this just another step in a much larger financial revolution? Let's break it all down. BlackRock, which manages a staggering $12 trillion in assets, is now officially registered as a crypto asset firm in the UK. And this means that the investment giant can now offer crypto-related services under UK regulation, which is a significant milestone considering the FCA's historically strict stance on crypto firms. And this move is going to allow BlackRock to launch its iShares Bitcoin ETP, or exchange traded product, in Europe, which is specifically listed on the Euronext stock exchanges in Paris and Amsterdam. And let's not forget that earlier this year, BlackRock's US spot Bitcoin ETF became the largest Bitcoin ETF in the country with over $47 billion in assets. And in fact, the US spot Bitcoin ETF as a whole has raked in over $107 billion in just its first year of trading. So why is this such a big deal? Well, the FCA has been notoriously picky when it comes to approving crypto firms. BlackRock is now only the 51st company to receive FCA approval, and it joins names like Coinbase, PayPal and Revolut. And the FCA has only approved about 14% of all firms that have applied, and many applications have been rejected due to poor quality submissions or missing key compliance details. So for BlackRock to pass this sort of stringent regulatory process suggests a major shift in how institutions and regulators are starting to view Bitcoin and digital assets. So let's talk about the product that BlackRock is rolling out. It's called the iShares Bitcoin ETP. It recently launched in Europe with an initial fee waiver, which makes it one of the cheapest Bitcoin investment products on the market. And the current expense ratio is just 0.15% until the end of the year, after which it's going to increase to 0.25%, which puts it on par with competitors like CoinShares. Now, this ETP is designed for both institutional and also informed retail investors. That's really important. And it means that we're seeing more bridges being built between traditional finance and the crypto world. And according to BlackRock's head of iShares products for Europe and the Middle East, Manuela Sperandio, this marks a tipping point where retail and professional investors are converging in the crypto space. So BlackRock's approval is signalling a major institutional push into UK crypto markets, and with increasing regulatory clarity as it comes, we could see more firms seeking approval. In fact, we will see more firms seeking approval. This is going to lead to a greater institutional adoption, but there is a key question here, and that is that whether this is going to benefit retail investors, or are we seeing Bitcoin being absorbed into the traditional financial system in a way that centralizes control. And at the same time, the FCA's approach remains strict, and many smaller crypto firms are struggling to get approval. So is this really a step towards mass adoption, or is it regulation creating barriers for smaller players while it paves the way for institutional dominance? One thing is for definite, and that is that BlackRock's approval is a defining moment for the UK crypto industry. So whether you see this as a win for mainstream adoption or not, or this sort of sign of increased institutional control, the fact remains that Bitcoin is no longer on the sidelines. It is officially now playing in the big leagues. Let me know what you think though. Is this a positive step for crypto in the UK? Or, do you think that institutions are taking too much control? Drop your thoughts in the comments, and don't forget to like and subscribe for more crypto updates. Thanks for watching, thanks for listening, and I'll see you in the next one.